For an expert's take, Susan Stone, Credit Union SA Chair of Economics at the University of South Australia, is joining us now from Adelaide. So, Dr. Stone, you just heard there are some analysts pointing to economic common sense as the reason behind a rather timid global response to Mr. Trump's tariff regime. Do you agree that this kind of restraint is the wiser path, or are they making a mistake by not pushing back more forcefully?
I guess I would answer that in two ways. The first one is by not pushing back at all, it may just embolden the Trump administration to put on further tariffs or make further demands. And then the question becomes, where does it stop? But from an individual economic perspective, for most countries, it's not just the tariffs, because as we know full well, the brunt of the tariff payments are going to be paid by U.S. consumers and U.S. businesses. From another country's point of view, like mentioned EU or India or many Southeast Asian countries, the real question becomes, how do tariffs affect them vis-a-vis their competitors going into the U.S. market? So if everybody is having increased tariffs, then any individual country is no worse off vis-a-vis other countries exporting to the U.S. And so in that sense, it really may make sense for countries to just, go ahead, make deals, have the extra tariffs, knowing that the majority of those tariff costs will be passed on to their U.S. counterparts.
Dr. Stone, I'm curious as to where all this extra money is coming from, 50 to 60 billion in extra customs revenue. I know what economists are saying, and I remember my economics 101, but we've also heard from Peter Navarro and Howard Lutnick who say, look, it's the suppliers who will be cutting their prices or paying direct to the numbers, or the breakdowns tell us at this time at all?
Well, it really is dependent on the individual commercial contracts or relationships for the individual deals, because it's true, there have already been some companies, like in Vietnam, for example, who have offered to pay like half the tariffs on existing orders or new orders. And so it's really a negotiating process, and exactly how much is borne by the supplier and how much is borne by the demand side is really, as you say, good old economic theory, supply and demand, who has the stronger position or who has the most price sensitivity will show where that gets paid. But ultimately, it is going to mean higher prices down the line, because if your supplier has to take a cut and then their profits go down, they're going to have to increase their prices somewhere along the line. So it really is playing a little bit of whack-a-mole, where you may be able to slam it down in one area, but the costs are going to go up somewhere else. And ultimately, it's just going to lead to more expensive trading. And as countries seek other export markets, that's going to reduce the supply to U.S. markets. It's going to reduce the ability to source from different competitors. And that, of course, will mean more of the prices can be passed on to U.S. consumers. And the other thing that we need to consider is the price of compliance, which is extremely high for businesses on both sides. And that's going to push costs up.
So, Dr. Stone, we have 3 deals and 1 truce with China so far. I mean, does this provide any sort of a template, for the other 150 countries who are, I presume, actively seeking some sort of a trade agreement with the United States as well?
Yeah, it's a really interesting situation that you raise, because we didn't see letters go out to say like Taiwan, Switzerland, India. So the assumption there, and as the White House has announced, deals are close, especially with India. And so we may see a deal, but we have to keep in mind that with Vietnam, with Indonesia, with the UK, these are kind of broad framework deals. A lot of the details of these deals have yet to be worked out, have yet to be put in place. There's kind of a high level tariff rate. And then there's, in the case of the UK, there's some sectoral relief on some tariffs, or they put quotas in place of tariffs. But many of these deals are really would be described more as frameworks. And so if countries can get to that stage and it gives them a bit of a reprieve on higher tariffs, that may happen. But that's a lot of negotiation in a very short amount of time. So it really doesn't seem very practical that all of that will get put in place, especially before August 1st.
Sure. And Dr. Stone, many economists have been warning that Trump's tariffs could trigger a sharp rise in inflation or even push the economy into recession. But so far, we haven't seen a major meltdown, so to speak, aside from the notable uptick in June inflation. Were those warnings overstated, or is the real economic fallout still ahead?
I think that we still have a lot of time to go. There's been a lot of stop and start with the tariffs, and the levels have gone up and then they've come down, and then there's an agreement. And so there's still all of that uncertainty. And so the big thing we see is a fall in business investment and consumer confidence because of all of this uncertainty. But with the numbers, what we saw was when the tariffs were foreshadowed and then when they were announced, we saw businesses early in the year really build up inventories. So we saw this big surge in imports to the U.S., and we saw inventories really increase, and businesses were managing their inventories. And that was really expected to hold businesses over until about mid-year. So it's not really all that surprising that we haven't seen big jumps in prices as yet. I would think that we would see, as those inventories begin to dwindle, as these higher tariff rates are put into place, and businesses are going to have to start buying at these higher rates, I would expect to see those inflation numbers increase.
Dr. Stone, thank you so much for talking to us this morning. Very grateful. Susan Stone is Credit Union SA Chair of Economics at the University of South Australia.